Hey everyone, thanks for tuning in. Today we're going to be talking about crude oil. So if you guys like the content, please subscribe to the channel. And we're just going to go ahead and jump in here. So today we're going to be looking at WTI as well, which is West Texas Intermediate, as well as Brent. So you can think of it as WTI is basically a reference for oil in the United States, and it's typically more so used for like gasoline grade, whereas Brent is it's from the UK, and it's more so for diesel fuel. So these are different places where you can track the price of oil. So, you can see it does have, an expansive history that we can just see here going back to the 80s on TradingView at least. But I want to show you some patterns at least that I think are interesting. The first being, if you're not familiar with the RSI, this is the relative strength index. So whenever it's above 70, it indicates that something is overbought significantly, and when it's below 30, it's oversold. And you can see times in the past when it came up to 80 or so, it very quickly saw a sell-off. So here, for instance, it reached around 80, and we saw a move of around negative 60%. Another time that we had 80 or so, it was, or I guess this is 71, it's not 8. So this is basically right over being overbought. If we go back up to another time where it was 80, you can see here it was 81, which corresponded to that peak, and then it ultimately dropped by around 75% or so. And again, typically when it reaches these points close to 70, it does indicate a sell-off is likely coming. As you can see, this peak from here to here was negative 56% or so. This peak is actually right here, and if you measure that down to this bottom, it was around negative 45%. And again here, at this peak where we reached around 70, we had a drop from there to there, which was around 37. So you can see the times when the RSI is overbought when it's above 70, and especially when it gets close to 80. It's definitely a time to consider what you might want to do with your position. Now, this is not financial advice. I just want to analyze these trends and show them to you guys. So the opposite also seems to hold. So when it's above 70, between 70 and 80, it typically means there's a sell-off coming. But oftentimes when you see it go down to 10, 15, 20, it means it's severely oversold. And you can see that happen in March of 1986. So if we were to take a measured move here, it subsequently went up around 120% or so. Another time happened back in 2015 and 2016, the first time being at this point. So when that happened, it went up by about 34%, but note that it did keep falling. And again, when it was oversold and it hit an RSI of around 25, that's when it saw this move of 160%. And the reason I'm showing you this is because you can see that currently the RSI is at around 28. And note this is on the monthly, not the weekly, not the daily. This is on the monthly time frame. So I think I just want to point this out to everyone. I'm not a huge fan of drawing trend lines, but you can kind of see more or less that window that this is trading in, and just drawing some crude levels there, you can see that this kind of is has at least historically acted as some level of support, whereas this trend line up here has historically acted as some level of resistance. But we also don't want to just pull up TradingView. We like to look at some other charts as well. So I made some of those So let's go ahead and jump into some of these. Here you can see this is the same thing. It's the price of West Texas Intermediate oil. By the way, if you want to talk about these charts, then check out this Telegram channel, which you can see here, and also find a link to in the description below. So here's WTI. If we compare Brent to it, they basically move in lockstep with each other in a sense. I mean, if one goes up 10%, the other one's likely going to go up 10%. But the prices are somewhat different, and even for last couple decades or so, you can see that Brent has been selling at slightly higher for the most part than WTI, so it tends to be at a premium comparatively. But since they're basically the same, let's just look at one of them. And another thing I want to show is, this tends to be our lower bound region, at least historically. And you can see that we're really close to it. We came down and we bounced up a little bit, and we've kind of come back down in the last day or so. But this really it does seem to be a fairly decent time to get in. Again, this is not financial advice. This is just based off historical patterns. Certainly, it would seem to carry less risk getting in, around this area than it would be getting in at these points up here when it's already gone up a lot in recent history. So this could, I think this could theoretically be a good time to at least investigate crude oil. Now, I wanted to show the 30-day return on investment, which I think is actually quite remarkable. So if you look here, so basically this is had you bought 30 days ago and sold today, what was your ROI have been? And you can see for the most part it fluctuates between 0.8 and 1.2. So basically you're gaining 20% or losing 20% approximately. And then there's times where it goes up higher. It goes up to almost 1.8. Here it drops down to around 0.5 or so. But interestingly, now it's nearing 0.2, which is in the history that I have here of historical data dating back to the mid 1980s is by far the worst 30-day return on investment that you could have. Now, does that bode well for people who are already trading it? Not that you can trade crude at spot. I'll talk about that in a second. But it's interesting because it does present a unique opportunity to say, okay, well, we're really far down at the current time. And if you were to look 30 days ago, the price was significantly higher, but because of the pandemic, it has dropped significantly. If we were to look at the 1-year ROI, this is what it looks like. So you can see it tends to fluctuate between around 0.5 and 2 or so. So basically 50% loss in a year or 100% gain up to approximately that level, with it going up even higher over 2.5 x on your investment. But I also wanted to draw your attention to this, this trend here, and that it does seem to be decreasing on this end. But it seems like we've hit this point here, and it did rebound a little bit. And the price of crude about a year ago, if you're curious, was around $50 to $60. So it doesn't necessarily mean that the price of crude today has to increase for the 1-year ROI to go up, because it just depends on if the price back then was decreasing. Then even if the price today stayed the same, then the 1-year ROI would increase from where it was. So I hope these are informative to everyone, these graphs. Now, I wanted to talk quickly about, for those who are unfamiliar with this market, you can't just go out and you can't just go buy crude oil at spot price and then sell it. It operates, with futures trading, and a lot of times you have to be careful because the gains that you might see in the spot price could be eaten into or over, or even worse, the roll in the contract. So futures contracts do expire, and you're basically you can think of it in a sense as when the contract rolls over to say a new contract, if the price of oil, say the value goes up, then it's going to eat into whatever gains that you've had. And this, you can think of it as passing off the the price it take, or the amount of money it takes to store the oil. It's basically being passed off to these people, who are in these futures markets. At least that's how I like to think about it. So, with that said, if you are looking into trading oil, trying to get into crude oil, just consider the fact that you're dealing with. I mean, you also have to look into contango and backwardation. If you're not familiar with that, I can talk about that in another video. If you guys are unfamiliar with futures markets and how that stuff works, and why you can't just buy it at spot price and sell it at spot price, but instead you have to deal with the futures market. And what does that even mean? Like, why can't you just keep the profits if you buy it at, say, $20 a barrel, and then it goes up to $40 a barrel? Why can't you? Why does that mean you don't necessarily pocket that ROI? And it's because of the fact that the futures contracts will expire, and you have to roll that over into a new contract, and that can eat into your gains. But it has also in the past been offset when you can put some of your money, some of that goes into, say, or you get interest rates. That when the interest rates are high, they can actually help you out, because in futures trading, typically it's only a part of the amount of the investment that you're actually using, and then the other part can go towards, say, earning interest or something. But anyways, I'm kind of rambling at this point. I hope you guys find this video interesting on crude oil. I thought it was just important to pull up some other charts here. I know we mainly look at cryptocurrency on the channel, but I do like to talk about other markets like the S&P 500 and Tesla. Here we're talking about crude oil. We've spoken about gold as well. So if you guys like the content, please comment down below. Let me know what you think about it, and subscribe to the channel. And again, if you want, feel free to check out this Telegram channel here in the description below. And if you want access to premium content, you can also find that in the description as well. Lastly, I just wanted to comment on some of the underlying things that are affecting the price of oil. So not only does the supply affect it, but also the demand, obviously, and politics as well. So while we're in a pandemic, the demand for oil has just gone drastically down, because people aren't traveling as much. People are staying at their houses, so there just isn't as much of a demand for oil. But in addition to that, the issue that Saudi Arabia and Russia were having with identifying at their meetings at OPEC, and they were unable to come to an agreement on how many barrels of oil to produce a day. This was several weeks ago, and because of that, Saudi Arabia just said, okay, well, we're going to flood the market with oil, because they can remain profitable even if it's selling at just like a few dollars a barrel, whereas it would drive many other people out of business. So not only was demand for oil tanking, but the supply was just oil was just being the supply was going up quite considerably. So it was like a double whammy, and that doesn't even take into account other politics and whatnot. So you can't always just look at price charts, obviously. I mean, I do look at the math behind prices and long-term trends, and looking at something like this. But this does not necessarily take into account external factors. For instance, how long will the global economy remain closed? When will things get back on track? So, just know that if you get into any market, whether it's futures on crude oil or whatever it might be, even though the price might look very attractive, which, I mean, historically this does look like a pretty good time to get in. This 1-year ROI is so far down, and the price is it's around $20 a barrel or so. So it might seem like an attractive price, and I think for the long term, the macro scale, it is. But it also, obviously, in the short term, if you're investing money that you're going to need in a few months, and it would just be nothing but pure gambling, just because we don't really know how long the economy is going to stay closed. And even that, I mean, even if you look at traditional markets, they don't seem to react in the way that most people might expect to news. And part of that isn't, it's not really that much of a mystery. It's just that a lot of news, like skyrocketing unemployment, you know, people were pricing that in before it happened. Now, that's not to say that the stock market can't fall further. I imagine it could, but if you also have to consider that if you know about the news, then it's likely been digested by the market weeks ago. And in terms of the coronavirus stuff, the way to really get ahead of that was looking at the numbers early on and noting the exponential growth that we were seeing in a lot of different countries, which we did cover extensively on this channel, and talked about the potential effects that it could have on traditional markets as well as high risk assets. So I just want to put that disclaimer in there just so, if you do try to get into futures trading, whether it's with crude or whatever it might be, just consider external factors, fundamental factors of the market. So that'll wrap it up for this video, guys. Again, if you enjoyed the content, please subscribe, and I will see you guys next time. Bye.